Hey traders, David Frost, My Strategic Forecast. You're here for another episode of Common Sense Market Analysis. Today is Tuesday, August 20, 2024. We're looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on the docket today? Well, we had a very narrow-ranging day. There wasn't a lot of change from yesterday. Yesterday was a pretty decent size up day. Today the market traded in a narrow range at the end of the day. Didn't really get very far. Is she running out of steam? Let's take a look at where we are and determine A, what we talked about last night, where they are today, and what it would take to make the next leg higher activated. This is an area we looked at last night. This high here on this candle from the 17th of July is 560.51. We'll put it at 560.50 for argument's sake. That happens to be the entrance into no man's land where there's a gap up above. There's generally speaking a bull-bear battle at those places. Stay with me. There's a method to the madness. What was today's high today? Happens to be 560.84. Well, let's just drill down a little bit. This is a 5-minute chart already. Right of the vertical is today's activity. 560.50 was that place. That happens to be in the neighborhood of high of day. High of day was a little higher, but we know the reason why there was bona fide overhead resistance at that place. It's the entrance to no man's land that works the large majority of the time. Okay. Fair enough. Where are you going with this? We're going right to 9:15 in the morning before the opening bell. Even before that, but here's one. If they get to 560.50, give or take, it's the beginning of overhead resistance for a scalp with potential. And potential is highlighted in bold. Why do you think that is? I was kind of pounding the table on this area today in the live trading room, inside the numbers. This was an area to short the tape. Let's see what else we have down here a little bit. Check this out, 8:45. This is what I'm writing. One of these mornings, they're going to begin a real retracement of the recent move. We don't know which one, but we do know there is one sooner than later. Now, we didn't get it today. We got a little retracement. We got a really nice trade out of it. But one of these mornings, we will get a protracted correction that will morph into a bona fide retracement of the recent move from the low on the 5th of August up to the current price. How did we know where to cover the short? How do we know where to take profit? 1016, 550, 850 is the next number on the way back down. Can bounce the tape, doesn't have to bounce the tape, but that's what we were saying. It's in here a couple of places, 558.50. Traders inside the numbers, certainly traders in the live room, got the large majority of that move. We all participated together. A lot of profit was made on this short in the live room. Kudos to all those traders that took advantage of it today. It was what we call a group trade. Everybody in the boat, ride the wave back down. What I urge you to do is pause the video, read the notes, go back to the chart to double check the work. We were talking about 560.50 at 0:30 in the morning. This is no accident, no coincidence. Pause the video, read the notes, go back to the chart to double check the work. I basically just wanted to highlight the absolute nice and juicy short trade that we took as a group this morning in the live room inside the numbers. The rest of it was a pretty dull day going back and forth in a very narrow range. Really wasn't a trader's tape other than the morning trade. That's what traders sign up for in the live room. They sign up for the morning trade, stocks on the move, other stuff that's moving after the opening bell, what we can find, what market it is, we don't care. Commodities, stocks, exchange-traded products, makes no difference. We trade them all. Do we need to discuss anything further from a daily chart perspective? Above all the moving averages, the trend is your friend. She's approaching within a stone's throw / chip shot of the all-time highs. Therefore, we're just going to take it at face value and say today was a nothing burger day, narrow ranging day, no material change in the S&P, and move it along. What about the folks over in Camp IWM? Now, they were down 1% today. The SPY was down less than 0.2%, 16 bips or basis points. The IWM was down 1.17%, $2.51. It is my favorite market leading indicator. We are putting this as a puzzle piece on the table. They came in to check back in at the 20 period moving average on the daily chart, get below the 20 period moving average, and they'll start running a test of the low from the 16th and possibly the low from the 15th. The low from the 15th is the gateway to the 50 period moving average and the gap left open on the 14th. So that's the progression of events. This could be a one-day decline, and the next day up we have a gap up above. Remember, we're the umpire calling balls and strikes. We look at both sides of the tape, unbiased opinion of what we see. What makes a market is 2, 10, 20, 100, 5,000. Any number of people look at the same information, the same data points, the same charts, the same information, and come out with entirely different conclusions about what they see. That's what makes a market. Put that on a sticky note. My second favorite market leading indicator are the folks down at the transportation department. They were down almost 1% today, down 0.9%, 144 smackaroos. Another down day for the transports in the face of a market that was basically flat in terms of the S&P. Second favorite market leading indicator, a number one, however, canary in the coal mine. We're not going to make a federal case out of it while they're above all the moving averages. Should that change, we may open a case file. Put that on a sticky note. Same routine for the Q people, very narrow ranging day, little doji candle. Is that going to be a sign and or signal of a trend change? It can. They are lagging the S&P from where they are on the chart. That same black line is the corresponding spot the SPY got to today where we shorted the tape, if you recall. Above all the moving averages, trend is your friend. We may have a sign or signal of a trend change if they start back down and recapture from above, meaning recapture and get below the 50 period moving average, which is basically the same low as yesterday, Monday the 19th. That will be a raise the eyebrow, knocking on the door for lower prices situation in the Qs. Right now, we're not going to read too much into a narrow ranging day after a pretty decent up day yesterday. We'll call it a pause in the running. What about the financials? Nothing doing over there. Down 0.33%, down 14 cents, but well above all the moving averages. It was nothing other than a slight down day. We're not going to read anything too much into that. You do have this triple top scenario we talked about yesterday. Are we looking at it as a triple top, or are we looking at it as they're running a test of the all-time high once again? No reason they can't bust through, but we're going to use the last breakdown candle high in the sequence, 44.11, as the bogey. Closing candles above 44.11 will open the door for another leg higher. The trend is your friend. Weekly chart trend is up. Monthly chart trend is up. Look at this test candle situation on the monthly chart. They ran a test of the previous month's breakup candle low, spiked it, ripped it back up in the other direction, and are back at the all-time highs. Where have you heard that before, or that type of situation that kind of puts the triple top theory in shame when you look at the XLF from a monthly chart perspective? Tested a breakup candle low, ripped it back up in the other direction. Where have you heard that before? Write that down, put it on a sticky note. Smashmouth down about 1.3% today. Again, can be canary-ish, is a canary to the tech sector. The semis are a good proxy for the tech sector. Not every single day, not every single tick, not every single move, but in large part, bigger moves. Are they putting in a lower high? Is this going to be getting stymied at the 50-period moving average, lower high in comparison to where the other charts got to, meaning the Qs and the S&P and such. Is this a tell? Is this a canary saying we have weakness, relative weakness in the SMH? Not speaking of just today, but overall relative weakness. There seems to be relative weakness. Write this down, put it on a sticky note. It's worth knowing about. Have I told you how much I appreciate each and every one of you? Without you, these videos are not possible. That is true and accurate information. We're pulling the ripcord here today. It was a narrow-ranging day, everything I intended to and needed to discuss. I'm David Frost. Couldn't do these videos without you. And thanks for tuning in to another episode of Common Sense Market Analysis.